Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Everybody, welcome to another Friday chart clinic, dating 2nd of August 2013. Okay, a few things in order. Firstly, just let you know, most of you may have know that our wow, Henry is giving me a lot of stocks as usual. Henry, do you have an account with us, Henry? Jupiter? All right. If you have an account with us with Jupiter, I'll appreciate it. Oh, okay. Should have an account with us. All right. Appreciate your support. All right. Thanks a lot. Okay. As you know, a little bit in the house manner, the we have a malware attack. Some of you may aware of this. Let me just try to push this back. Okay. And that's what's causing it. That's right, with Jupiter Securities. Thanks a lot, Henry. Malware attack last week. Let me show you what are the sign you're getting a lot. I get a lot of complaint, but rest assured, if you use the Internet Explorer, you may not get this problem. Now, to bypass this problem, what you need to do if you're using the Chrome browser, the website Chrome browser, you click on Advanced, then you proceed at your own risk. It's okay because we have already cleaned up the website and we have submitted the review of the website to Google Webmaster. Now, if you are still apprehensive of it, you can do two things. You could either use the Internet Explorer or use the iPad to access the website. That would be best. Then you because if you're using iPad, nothing get written to it. If you're still apprehensive in the manner of how someone might steal your data, like this picture in here, then I suggest you use your tablets or phone to access it, or use some Safari browser. All right, so I hope that's okay. Oh, hello, hi, and okay, let me just change that one. No, what you want to do if do not visit that, you click on Advanced and you click on Proceed at your own risk. If you click on that, then you can get into the website. All right. Now, last week we had our let me go back. Last week we had our second half 2-0 market outlook, and we had a great turnout. We have close to about 60 people who came, and thank you to all of you who came, and thank you for your support that we give. We have 4 speakers in the session. Let me just share with you here. All right, we have 4 speakers in the session. Let me just bring up the website. Okay. All right. Okay. Yes, we'll get to that. Okay. We have 4 speakers. Benny Lee was talking about stocks. Now, this is a picture in here. You can see it. We have it on YouTube now, a video promotion. And we also have Mr. Fu Senchin from ECS. We have Bill, as usual, with his uh, usual outlook about the stock market. And myself, we did the outlook on the KLSC. Now, I have done a 3-minute preview in here. You can see all, catch it all in here, the video. And those of you who want to take it to the next level or really want to gain the insights and what's happening in there, give us a support. We paid the IT guy to have the video done up, and we'll appreciate any support you have to purchase the video here at 119 ringgit for all 3.5 hours for date. And this is the profile in here. You can read all about it, and once you get that and the payment is done, you will see a video like this. Okay, you will log into the website Traders Tools Review. Rest assured, there won't be any malware attack, whatever. As I said before, the website being clean, and you get the video here, which is part. This is Benny's video being moved into 2 parts, and another one here, that is the Mr. Fu Senchin video, and that's Bill's video 2, part 1 and part 2, and also mine. Let's see if you click on here. Oh, okay. We'll let me get back to this one. This could be a connection problem. Okay, let me get back to here. Oh, this is interesting. I will look into that. I think got to do with the video. Okay, I'll come back and look into the video, see what's wrong with that. But this is as of the video. If you have any of the problems, just let me know for accessing the video. Okay. So that's for the video for those of you who really want to know about the video access to our video proceeding of the second half 2013. All right, so what's on the agenda? Next one is the oh yes, our foundation course will be next Friday. Okay, our foundation course will be sorry next August 5th and 6th, Monday and Tuesday. We still have a couple of seats left in. We are doing it at our office. Let me just show you the brochure here, right? And just bear with me. Just bringing up the brochure. Okay, just bear with me a bit. I'll just bring up the brochure to show you our foundation course that we are doing. Okay, there you go. This is our foundation course that we're doing on Monday and Tuesday, August 5th. We still have a couple of seats left. It will be done, will be conducted at our office at Jupiter Training Room at level 9, Jalan Rajasawan. So if you're interested, send me an email or give Dolly a call, and we will teach you the things that we always talk about here, that you can analyze the stocks yourself. And that would be great, rather than relying on someone else to give you the input. I think the whole point is getting and becoming an educated investor. Okay, so that's on this coming Monday and Tuesday. If you miss this one, the next one is likely to be possible year end. Okay, so take note of that. If any of you are interested, let us know. Okay, so next one, if we have on our agenda, is the magic scanner training. Now the magic scanner training will be held on August okay, on August 7th, Wednesday night at 8:30 to 9:30. So you should have gotten a invitation for the magic scanner training that we do in our website here to enable you to analyze stocks and pick up the stocks that you need from a fundamental basis. Now, if you are a like subscriber, you will get this training, which is on the 8:30 to 9:30 on August 7th, Wednesday night. Okay, so take note of that. So with that, that's I will pass your the floor now to Bill to just to give you an update. All right, Bill, here you go.
Yeah, thank you, Martin. Okay, today I'm going to share something with you that is something about the background. And remember, when we're investing or whether we're trading, the most important thing, obviously, is to understand the background, because the background is what generates your returns. Um, or also generates losses if you don't know what you're doing. So I happen to I subscribe to this magazine called Fortune, which is a business magazine, and it's focused mainly on the U.S. markets, but it covers world markets as well. And they had a very interesting article in here by Alan Sloan, who is a bond fund manager in the U.S., very, very famous bond investor. He's up there with PIMCO and Bill Gross and those guys. And the article is interesting because it talks about something that the crowd does not focus on. The crowd of investors always watches the Dow Jones, the S&P, the KLSE, um, and but really they don't focus on the bond market. But in actuality, the bond market is much more important and much more crucial than any other market. In fact, interest rates, credits, and interest rates are what drives world markets. They drive everything. The interest rate futures market, the Treasury bond 10-year market, that is really what drives the whole world, like it or not. Cost of money. And money is what makes markets go up or go down. Lack of it, they go down. More of it, they go up. So right now we have QE, they're printing more and more money, and this is flowing into the stock market. The stock market goes up. However, there's something that not many people are noticing, and that is the price of the 20-year Treasury bond, the 10-year Treasury bond. On July 5th, 2013, there was a massive drop in everything: gold, silver, commodities, soybeans, stocks, everything. Massive drop. There was almost 1 trillion of wealth wiped out of world markets when Bernanke said that he was going to stop the tapering. And at the same time, the Treasury bonds had the biggest drop in like 15 years. And the drop, they fell all the way. Interest rates for the 30-year bond went up 1%. That affects mortgage rates. But not many people were talking about it. However, based on the capital loss of bonds on that day, July 5th, that would be equivalent to, according to Alan Sloan, a 615-point drop on the Dow. Now, if you had a 600-point drop in the Dow, or you had a 150-point drop in the KLSE, I promise you that would be on every headline of every financial newspaper, and there would be a panic. But when the bonds had a similar fall, nothing much was said. However, let me tell you something about bonds. Quite a number of years ago, I worked with a bond trader who traded the Treasury bond futures, full-time job, and he shared a lot of things with me. And the bond market is relentless. It is like a freight train coming down the track, hundreds of ton freight train. And when it's moving, even moving slow, it's not something that can be stopped. The trend is incredibly persistent. We've had a 30-year bull market in bonds, and now the train is slowed down and it's beginning to reverse direction, and it's beginning a new ride. And if you fight this ride, you're going to get crushed. You're going to get slaughtered. Nobody can beat a freight train. Nobody. Now, if you're trading things like palm oil or soybeans or things like that, or CI futures, yes, there's lots of volatility and whipsaws, and trends will reverse. But I can promise you a bond trend will not reverse once it's in motion. Why? Because they're driven by governments, by central banks who have the money, who can print the money. So be aware of this, be mindful of this. And we spoke with our analyst over at Inter-Pacific, Mr. Pongteng Siu, last week, and he agrees with me on this bond trend. So he said, look, if you want to protect your clients' money, and that's what Martin and I have been doing, focus on sectors where money will come out of bonds and into the sector. And we would avoid definitely insurance companies that have lots of bonds. We would be very wary about banks, although we've had a correction in banks. A lot of people are recommending banks. Avoid that for at least the medium term because the cost of money is going up. And he said a lot of professionals, Pong was saying, are still moving into the super quality blue chip shares in Malaysia, the ones that we've been holding. You know what they are. This is where we're allocating capital. And obviously, we want companies that do not have loads of debt because if short-term rates go up, their balance sheets are going to be squeezed. Margins are going to be squeezed. So avoid that.